Have you ever looked at the stock market and felt like it was designed by the same people who write the US tax code? Like, it's this complicated, secret language that only Wall Street insiders are supposed to understand? I promise you, it's not. By the end of this, you'll understand the one big idea behind all of it, and you'll realize it's not rocket science. You're not alone in feeling overwhelmed. The financial world loves its jargon, but the good news is the core concept is way simpler than you think. This video is my promise to you. We're going to cut through all that noise. Here at the Econ Finance Hub, our mission is to make these topics clear, simple, and accessible for everyone. So let's get started. First, let's get one thing straight. When you buy a stock, you aren't just betting on a number to go up. It's so much simpler and so much more powerful than that. Imagine you love a local coffee shop. They make the best latte, the staff is great, and there's always a line out the door. You believe in them so much that you wish you could be a part of their success. Well, with the stock market, you can. You can buy one single brick in their wall. That's what a stock is, a small, official piece of ownership in a business. Think about Apple. When you buy a share of Apple stock, you literally own a tiny fraction of the company. You own a piece of the iPhone designs, the App Store, and every Apple store in the world. Now, does this mean you can show up at their headquarters and demand a free laptop? Unfortunately, no. I've tried, but it's the next best thing. The next time you're at a Starbucks and see 3 people working on their MacBooks while listening to AirPods, you can have a little smile. Why? Because you own a brick in that company and you're watching your business thrive. The same goes for Microsoft. Almost every office in the country runs on Windows. Millions of people go home to play on their Xbox. If you own a piece of Microsoft, you're a part owner of that entire ecosystem. So remember that. You're not a gambler. You're an owner. Okay, so how does a private company like that coffee shop start selling its bricks to everyone in the first place? They have what's called an IPO, an initial public offering.
Let's go back to our amazing local coffee shop. It's so successful that the owners want to open 100 new locations across the country. They need a lot of money to do that, so they decide to go public. This means instead of being privately owned, they're going to sell their first ever batch of shares to the general public. An IPO is the very first day the company sells its stock on the market. Think of it as the company's big debut party or grand opening ceremony. There's a ton of hype and excitement, just like the line around the block for a new iPhone. This is the moment a private company officially joins the giant popularity contest. Which brings us to the next big question. If we're all buying bricks in these companies, what makes the price of that brick go up or down? Here's the simplest way to think about it. The stock market is a giant popularity contest for companies, and money is the vote. It's like high school all over again, but with better funded cliques and slightly less bad cafeteria food. If more people want to buy a stock, which is voting for it, than sell it, the price goes up. If more people want to sell a stock, which is voting against it than buy it, the price goes down. That's it. That's the whole game. The entire market is just a reflection of what millions of people think a company is worth on any given day. And people cast their votes for 2 main reasons. The first is voting for a future dream. Tesla is the prime example of this. For years, people poured money into Tesla not because of its current profits, but because they were voting for a future they believe in, a world of electric cars and self-driving technology. They're voting for a dream of what the company could become. The second reason is voting for a company that's a powerhouse right now. Think of a company like Microsoft. People vote for Microsoft with their money because it has current, massive, predictable profits from software, cloud computing, and gaming. You're not just voting for a dream, you're voting for a stable, profitable giant that already exists. So what drives all this voting? It's usually not cold, hard logic. It boils down to two very human emotions that swing the entire market: greed and fear. Greed is the fear of missing out. It's that feeling you get when a stock is shooting up and you hear stories of people making a ton of money. You want in. A classic Wall Street joke goes, "What's the quickest way to make a small fortune in the stock market? Start with a large one." That's what happens when greed takes the wheel without a map. The whole GameStop saga was a perfect example. It became a cultural moment driven by pure, unfiltered greed and hype. Fear is the exact opposite. It's when bad news hits, a bad economy, a global crisis, and people get scared of losing money. For fear, just think back to the beginning of the COVID pandemic in early 2020. Uncertainty was everywhere, and it felt like everyone hit the panic button at once. People sold everything because they were afraid of what was next, causing prices to fall dramatically. Understanding these two emotions is key to understanding the market's wild swings. Now, you always hear about the US stock market on the news. What makes it so special? Think of all the world's stock markets as a giant international food court. The US market is the massive central pavilion that has the most famous brands and gets the most visitors. It's the biggest, most valuable, and influential market in the world, mainly because the world's biggest companies are listed there. And in this giant pavilion, there are two famous rival exchanges you should know: the NYSE, or the New York Stock Exchange. This is the old historic club. Think of it as the fancy wood-paneled steakhouse your grandfather loves. It's home to huge, established companies that have been around for ages, like Coca-Cola, Walmart, and Boeing. It's famous for its physical trading floor where traders ring a bell to open and close the day. Then you have the NASDAQ. This is the newer tech-focused kid on the block. It was the world's first electronic stock market. No physical trading floor needed. This is the trendy, high-tech sushi bar downtown where all the innovation happens. It's home to nearly all the giant tech companies you use every day, like Apple, Amazon, Google, and Tesla. The main difference is their vibe and history. One represents the bedrock of American industry, and the other represents the engine of modern technology.
This brings us to the most important decision you'll ever make as an investor. Knowing all of this, what game do you actually want to play? Are you a Spotify playlist builder or a viral TikTok song chaser? Chasing a viral TikTok song is like day trading. You're trying to guess which stock will get hot for a few days or weeks. You might get lucky once, but it's stressful, exhausting, and most people who try it end up losing. Building a Spotify playlist is long-term investing. You're not looking for a one-hit wonder. You are carefully selecting great, solid songs, companies like Apple, Amazon, or Microsoft, that you believe will still be great in 5, 10, or 20 years. You slowly build your collection, and you let it grow over time. Building that playlist takes patience, which, let's be honest, isn't always our strong suit. We want that Amazon Prime same-day delivery on our wealth, but the market has its own shipping schedule. And that's really it. That's the big secret. You're an owner of real businesses. Their prices are set in a giant popularity contest driven by fear and greed. And your best bet is to build a long-term playlist instead of chasing short-term hits. You now understand the stock market better than most people on the planet. So, I have a question for you. Using the analogies we talked about today, how would you describe the stock market to a friend in one sentence? Drop your best one-liner in the comments below. I'd love to see what you come up with. And if this video finally made things click for you, make sure you subscribe to the Econ Finance Hub. In our next video, we're going to break down exactly how to start building your first playlist with something called an index fund. It's the simplest and most powerful tool for beginners. You don't want to miss it. Thanks for listening, and let's get smarter together.